All right, good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for the weekend for April 28th, 2023. I should draw your attention to I pulled the trigger on the coaching program today, signing up for the whole person coaching program through, it's an ICF affiliated program. And I laid out the program on Patreon for the initial cohort, who's going to get the first time best deal ever on that as we build out the pieces and parts. And I'll leave that to you to check it out. I may talk about it later. But you've been patient, so let's get on with this. We will start with Alcoa and 30-minute charts. So this is our standard short-term swing. I think of it as the hybrid swing. This was a pretty good 2-day move we had Thursday and Friday, and it let me get back a lot of the the adverse gaps. Like in Alcoa, for instance, that adverse gap felt painful. We were able to turn that into this trade, but these last 2 days have been pretty good, and I was happy to raise some cash and reduce my exposure going into the weekend. So Alcoa was a standard SSC with a with a standard risk box here. I went to the bottom of the move here, and mostly because that was a standard risk box. It was a little further south than the PSAR dot, but the standardization was good. It closed well yesterday. Today it did this and kept going. I added the second position when it took out the hump right here, and it closed really well, and that was such a pleasant feeling that I cashed it. So that was +4 on the first one, and call that +1 on the second one. So total of +5 in Alcoa, and no over the weekend risk. I like that. That's more important to me than the technical pattern. Although I do notice that there is a gap in here that's got to be filled, and then this looks like really strong resistance anyway. That's getting ready to run into, and I've got 2 positions on, and I've gone and gotten I've gotten 80% of the channel from the swing low all the way up to expected resistance. So I know how to get back in. So that feels like a natural place. Still stalking AI. I just think this is going to be a nice breakout play when this finally breaks out of this. I'm going to be ready to go. Caterpillar. Now this was very much like the Alcoa trade, only this one we were on the side of the angels with a two-piece move that exited here on the short side, and then a 1, 2, 3 entry, which front ran the SSC and the PSAR flip, and then today it opened nicely here and went zooming straight up and then started to go up again. So just put the second one on, and on this orderly move into the close, just took the exit. So the first position was 1, 2, 3, 4, 5, 6 on the first one, and 1 on the second one. So that's 7R. And no overnight risk. And again, this thing ran right into that little buzzsaw of resistance. And so that did the same thing in practice that I was anticipating for Alcoa, which is why I got out of Alcoa where I did, and that's why I got out of this one here. That just feels like a nice recovery after that horrible sell-off, and it's kind of just back to normal. So it feels like the edge is gone. The abnormal move was this harsh sell-off. and I'm glad we got that. But the reaction to the abnormal move is the one that I really want to get, and that's the one we got also. So that was about as good a week in Caterpillar trading as you could ask for. Cliff, now this one on the other hand gets the SSC, but really hasn't run away from itself yet. Yeah, it's holding +2, but that was the one I wanted to hold rather than Alcoa. This one is a little more independent than Alcoa because it's a bit smaller in market cap. So we'll hold that one overnight. This was a 2-day shot in CVS. So this was the COTA 2 entry yesterday near the close. Held our nose, standard risk, and it paid off today. Hit what I considered to be resistance right at the top of the dragon, just like you would expect. And then as that crossed over the baby dragon and hit the dragon, that was enough to keep 2 of the 3 from the maximum favorable excursion. Dish Network, no trade today. Devon Energy. This one we started yesterday also. You will recall yesterday I hated this trade. Held my nose, and it got a rocket move up, 3 legs up, and then started to decay. And that was enough for me to get out and cash +5. So we were just raising capital today. Electronic Arts, I'm holding that one. That was a COTA 2, and that's up about +2. Still lots of room to go, and it has to get, it has to get back to here, but there's a big gap right there, right? And it's hovering right on the edge of that. So there's no resistance at all in here. There's no resistance. So this has a real good chance to go ahead and make that move on Monday. Emerging markets, no trade. That's one I didn't feel comfortable with yesterday of holding over the weekend or holding overnight because it had already recovered into this congestion zone. So yesterday we took that exit. It just kind of petered out a little bit today. There really wasn't much more. And if I'd still been in, I'd have been getting out around here anyway. So I only gave up that much, but I had no overnight risk, and that felt like a good trade-off to me. And I still like that idea. Ethereum starting to make the move. We're still in it from the SSC. Mexico, a beauty. The PSAR flip, tight risk box. It closed well yesterday. Today it gapped up and just exploded. So the first one is 1, 2, 3, 4, 5, 6, 7, 8, 9. And this one is 1, 2, 3, 4, 5, 6. So that's +15. And probably should have just put a third position on because of math. That ain't all bad. Mexico. Frog champion. Trades beautifully intraday. Trades beautifully on swings. Very directional. Often independently from S&P. Now, its running buddy here in Brazil, we took the emerging dragon and an intraday COTA 2 with a standard risk box down here to the PSAR and the bottom of the dragon. And today it started here, ran all the way up, came back. On the way back up, just bought a second, and then said that was enough for me. And I realized that I got entranced by the magnitude of the move, but it was only 1.5 on this one and about 0.5 on this one. So that's 2R, but I already had a second position in, and I just felt like I misplayed that one. Got a little too excited about it. So cash that one just to get back to the zero state. Intel, we finally got a gap that was in our favor. This was yesterday, the PSAR flip, and it closed pretty well right here. And then today, it gapped up to here. So that's the gap, which if you measure that in terms of this, that was a 1, 2, 3, 4, 5, 6. 6R gap in our favor. You know, that's payback from all the other misery. But this ran all the way up to the top and then started to decay when it came through the RL10. That was enough. And so we took 1, 2, 3, 4, 5, 6, 7, plus 7 on this one. And I think, I was not mindful enough. There was no way I could find a way to put a second position on. So we'll take plus 7 and just go home. International paper. We closed this one yesterday, and we got the fat part of that curve, you know, on that move, and it just kind of rolled over, and that's almost like a perfect sine wave. So there's nothing really happening there, except I like the fact that it is a Kata 2 setting up here for next week. And that's a favorable sign in the spring. If it can get through the zero line into the summer, that has a real good chance to go. So stocking that one for next week. No trade today. IYR, beauty, got rewarded. I decided to hold this one. It's holding plus 5. I'll have a stop like right there to lock in 4. KRE, I should have gotten out of that one today. Now that I look at this, I thought hard about exiting here. You know, I didn't have the entry was here. I neglected to mark that up on this chart. I remember being in this one because it gave us like a Kata 2 with a lazy W here. And I wanted to get out here. But I'm holding that one, but I don't like it. McDonald's, so this was getting back in a large way. Let me go back a little bit. So you'll recall that I've been in love with this thing because of the relative strength. Hat tip to Robert Gardner. Got 2 positions early and then suffered through all this and then finally had to take that exit. And then 2 days of like a descending triangle. And then it broke out with a gap up and cleared the previous peak. So we got 1, 2, put the third one on when it broke above this crucial price level here. And then held it here, and then today it rolled up and then did this. And now I would ask you, what is your decision if you're holding this? If you see this, and you know McDonald's is long and strong, and you know that the previous pattern looked like there ain't nothing, it ain't got resistance lately, and now you're holding that trade, and you're looking at this on a Friday, and you've got 3 positions in, and you got 1, 2, 3, 4 on the first one, 3 on the second one, 2 on the third one. So you're holding this, and you've got plus 9, and you got three positions on. What's your decision? I see my brother cashes 2/3. My brother cashes 2/3. Keep 1. Any other ones out there? I see keep 2. Well, Dan, do you sell one or two? Sell 1.5. Oh, okay. Um, Anybody else? Let's go look at the 3-day chart since we can. Let's go look at the 9-day chart. I mean, that's going to be all-time high in McDonald's forever and ever. Any other ideas? This is what I did. Come on. Added 3. Yeah. So we'll see. See you on Monday. See how that goes. I mean, we just pulled 30R out of the market and made bank today and got 9 on that one. If you were ever going to make a big bet on something that's going to work, how about McDonald's in a young bull market that's at an all-time high and closed well? It's the best looking chart in on the New York Stock Exchange. McDonald's hit an all-time high. Is there anybody in the world that's going to sell McDonald's right now? Nope. So you don't see me do that very often, but you saw me do it tonight. Just food for thought. Merck. I'm holding, so I get 2 positions on Merck. And that one closed 3, 4, 5 on this one, and 3 on that one. So that one's plus 8. Yeah, if you needed a place to put cash, why wouldn't you put it in McDonald's? Hey, Bill, check out real quick. See if they pay a dividend. Well, that would be the ultimate disgrace. Marijuana, no trade. Clean energy, no trade. Rivian. So we had the Cotta 2. Me love the Cotta 2. Standard risk. Closed well. 1, 2, 3, 4, 5. Plus 5. Got my stop like right there. The S&P. This one is looking good. That's a pretty nice recovery. Fake 1, go 2. Treasuries, I can't trade them. Tesla, finally, the fanboys rejoice. We finally got the SSC, and it paid off with +2 and closed well. All it has to do is get above 166 now, and off we can go. And that has a long way to climb. And then, yeah, so McDonald's not only does that, but it also pays 2%, so why not? And then U.S. Steel. Today there was no trade. Yesterday we closed that one, and no trade on it today. So the big move, the surprising one, was McDonald's. We'll see how that goes. All right, let's go to the sniper trade O today. Let's see, where is he? These are the new positions to hold for blended monthly rebalancing for May. Tech heavy, and then EFA is that Euro Asia, and SPY is the S&P. All right, so here is this is Alcoa. 3-minute. Let's see. Closed here. Opened without a gap. Or I'm sorry, opened here, sold off, rose up to here, came back to there, and then the next bar opened, and there's the entry. See if we can't zoom in a little bit, make that easier to see. Yep. Now, I want you to notice how responsive the MACD histogram is. That move down to here and then back up here was enough to make that thing just leave the Red River and go wicked winter. Standard risk. If you're right there, where do you put your stop? I'm going to say the candidates would be 1 bar low, edge of the dragon, southern skin of the dragon, PSAR, which is also +1. And then if I go, this is probably +2, like right here, right? So let's identify these as, if your stop is at 1, 2, 3, 4, or 5. I see votes for 3, 2, and 1. Top of the dragon, so there's an extra dot on that one. 2 more for 3. Yeah, nobody's voting for this one, and nobody was voting for that one. And if we kind of took the, another way to look at that is, see if I draw that, and then I draw that. 2 is probably the, a 1-hour trailing stop. So I think either one of those is good. So that would have been approximately like that. That's 2, and that was 3. Yeah, I hit about 3. And then there was an instant recovery you got to witness this, a sell off to here and open there and then just goes straight up, closes here and then keeps going. That feels like the spike that shakes out all the guys that were able to buy around in here or in here. That shook them all out. Like, imagine a guy who's trying to play short term and he buys right here. Can you imagine him saying, yeah, if it breaks below that bar, I'm out? So he was enjoying this, and then it comes down to here, and it hits his stop, and he's out for 1 hour loss, and then it just collects money and then runs right back up to here. That guy is suffering. So we just bank that one for about 2. Maybe, yeah, it's about 2. And then re-entry, standard risk box. And if it gets above this peak, we're almost there, then it's pretty good. It does briefly, and we lock in a no-lose plus dinner for 2. No, Greg says entry at the peak. I never do. Because the statistically significant points for me are the smooth price where the regression lines bottom out. That, to me, is the statistically significant peak. Not this. I don't know how much volume was transacted in there. So the point I have to be in not later than it crossing this line, because anything north of this line is new buying pressure. And I feel like this entry here in the pocket, I've seen the RL10 bottom out. I've seen it get through the dragon. So to me, I've got 1 piece of evidence, 2, 3 pieces of evidence that maybe this thing's going to work. And I'm getting in just in front of, that little peak. So I'm getting in this sweet spot in here in the pocket. That's what makes it a COTA 2. If I wait for that price to get north of the absolute peak, there may only been 1 guy on the whole planet that made that play. So this is the statistically significant price level. And this is a clear effort to front run it. And I always try to get that one. As soon as it crosses the dragon, but before it breaks out above the RL10, that to me is the sweet spot between the edge of the dragon here and the peak of the RL10. That whole region right in there is the optimal, because it hasn't started the runaway move yet. But to be honest, look how far it's come just in a couple bars. There's a lot of buying pressure already. And all it needs to do to blow the lid off it is get above that, which it did. And then I was so slow that I let it come all the way back, and I only captured no lose plus dinner for 2. But the point is, this is a better entry to me. If I wait for this, then look how fast I got to get out of that before it's no lose. This one gives me a fighting chance to give it a little more wiggle room and still capture some gains. COTA 2 re-entry. Quick exit. Quick short on the collapse. Quick exit. So those are 2 quick losses for about -1. Just getting chewed up. So this is about 0.2. This one is 2. So we're now at about net 1.2. Not much joy on this one. COTA 2 re-entry. Standard exit for +1. so now we're at 2.2. And I think that was it for the day. Yeah, and my brother Bill says what he does kind of what I do a lot, and that is just you get this chopper. You just draw a line across the top and across the bottoms, and you say, look, this is all just choppy crap anyway. So let me just stay out of the frying pan, and let me get my... Oh, there's an emergent, and you get that trade. And the size of this little box here is about the size of the wrist box anyway. So you just put a wrist box on top of that bad boy, and you're good to go. Like, for instance, if I just did this and brought him over, look at that noise box, that wrist box is perfectly encompassing the chop. That's how good the statistics are. They work. All right, we got a boatload of trades to go through here. So what I'm going to do is I'm going to save that to the end. And what I'm going to say is for the new guys in the foundations, if you upload, more than 5 charts, I may not spend forever on all of them. Unless they're like really instructive, but for the interest of time, I want to see you putting in the effort to self-coach with notes, and that way I'm not coaching you harder than you're coaching you. That's how you gain in some proficiency there. So let me suspend the intraday stuff so that we can get on to the weekend reports and release the guys that want to do that. Ugh. All right, so this is the weekend report. Was that a question for me, or are you just philosophizing? What will make it go bear normal? It has to go below. It has to go 2% below the 200-day moving average. Just remember that you have wherever the 200-day moving average is, plus 2% and minus 2% is what constitutes sideways. No matter what the slope of the price is. If it's within 2% of the 200 DMA, it's by definition sideways. Okay, that's also covered in the opening 10 minutes of the that 3-hour discussion of the daily report. And then if it's more than 2% above, it's bullish. So right now we are 5.11% above the 200, and that makes it bullish. And so for it to go to bear, right now it is 5% above the 200 days. So it would have to sell off 5% and then another 2% in order to get into the bear. So the first answer is it would have to be a 7% sell-off. And then on the volatility, you got to remember that it looks like this, that we go back 100 days and calculate the ATR percentage, and then the middle 2/3 makes it normal. And then if it's among the 1/6 most quiet of the last 100 days, then it's quiet, which is what it is right now. And then if it's among the 1/6 most volatile, it'll be bullish volatile. So it would have to get a little bit more volatile and get into there. And I can show you what that, if we go in this a little further. We have to go into the daily report, since you're asking. We are right here in terms of ATR divided by price. So this is the ATR percentage. And the black line is the average. And the green line is +1 and the red line is -1. So we are below the red line, and that's what makes us quiet. And then this would be volatile. And then between the red and the green line, this little region here would be normal. So we only got a little bit, we are approaching bullish normal. And, you know, the stats don't matter that much. Dan, I like the 32, and it's probably 40 because I look at some other specials, and I modified the rules for me a little bit more because I also look at that 9-day, the 9-day chart. All right, let's see, get back to where we are. Yeah, so bullish quiet, crushing it. The volatility has reduced enough that this is below, the Z1. So this could very easily, this is very good positive swing territory. Another good reason to love that McDonald's. Regression line fractal. These last 2 days have been key. And now all it has to do is get above 4. Oh, it did. He's peeking up and looking around. Go, dragon, go. And in his way back in his rearview mirror, he sees, that's the last hill I got to climb, 420. No, it's at 420's here. That's 430. So he's looking good. And like I have been saying in the last few days, summer, fall, and it just is starting to hook up into summer. That's an automatic buy and go. Very favorable. The 3-day is just doing nothing but making higher lows and higher highs, ready to go. And now here's the next one, and then the next one, and then the all-time high, and look how good that signal was back here, and still looking pretty good. Up we go. It cleared this hump and no resistance. Still trying to see which way this is going to resolve. These last 2 days make you want to believe that the 30-day high and the 150-day high are vulnerable to breakout. And then who's going to stop it? That's the daily. Look, everything looks good. On the 30-minute, as applied to the S&P. I find it helpful to put the the trading patterns that are on there, so you get a feel for what the psychological state of short-term traders is. I cashed this one today because I got everything that I wanted from that. Everything. In the same way that on this one, I got everything I wanted with that exit and missed the gap. And on this one, I got everything I wanted and didn't get burned by the gap. So I like exiting there on a Friday, right at the 30-day high, and this whole peak of resistance. I wouldn't be surprised to see fake one and go two, or a recovery back into this. That would be more extreme. And then if this hits and that fails, it comes to here. And if that doesn't hold, it comes to here. How fast could it move from here to here? How fast did it move from here to here? And it fails faster than it gains. That's a 2-day move if there's no buying pressure. ETF 13. There's your large cap and large cap tech winners. Diamond's looking pretty good. S&P tech even better than the NASDAQ. That's old school tech right there. That's Microsoft. Boy, if you don't own that thing, you gotta wonder why. ETF 32. This adds things like silver and gold, agriculture, that kind of stuff. Still, that's a pretty good looking crew right there. Microsoft, anyone? You have heard me beating the drum for that thing, and it's winning. It is winning the AI wars. And McDonald's just says, you can do what you want. I am just going to be above average in every dimension and just keep going. Plenty of room to go. You guys worry about tech and the banks and all that other stuff. I'm just going to keep making, the minimum viable hamburger. ETF Max. Let's see if there's anything worth looking at on that. It's in position 176. It's the only thing. That's the first one off the bottom that is in a buy position. And it actually looks materially different than all of this crap. This is a potential turnaround right there. That's probably a rotation into other European countries. Large caps are winning, and the NASDAQ is crushing it. Microsoft, a big component of that is Apple. EFA, Europe, tech, and then U.S. large caps. Gold is a specialty play. I mean, yeah. But if you're going to say, look at gold, I say look at silver, which has an industrial application as well. All of Europe. And there's the beauty of Mexico. And tech is leaving everything else behind. And the S&P, which is equities, are crushing treasuries, real estate, commodities, oil. Only gold has a temporary hold. But there's an upper limit on that all the time. So let's see. ETF liquidities based on ATR percentage. Regional banks, semis, gold miners. That makes more sense than gold. China, oil exploration, Brazil, and bio. Shift into the dailies. I think we've already seen those. Quick look at the big winners today. Apple, Disney, McDonald's, Microsoft. You can observe a lot just by watching. You can learn more by trading them. Still plenty in the auto framer mode. In the ETFs, Mexico, tech, staples. This is tech and staples. All good. Lots of auto framers. I still like Tesla here. It is at 3.3 to 1. And with that predominance in tech, and he's still down around 160, still think a lot of room to go. Not much of a squeeze today. Big range day. Only one Godzilla in the entire S&P stack and none in our symbol set. Quite a lot of double greens. Some large one-day moves greater than 3 sigma. That's amazing right there. That's that Godzilla. Yeah. I have these sorted by reward to risk ratio for the swing trades. All of the metals are in great shape for swings. Look at those reward to risk ratios, 3.5 and 4 to 1. Get ready to pound them next week. Tesla is still at 3 to 1. I love that. And emerging markets has room to go. This is the cut line, just at cut for 2 to 1 or better. The semis are fully, Intel and Nvidia are relatively fairly valued. Texas Instruments is way smashed. That's a real anomaly. That's a semiconductor is one of the most horrible swing trade frames. Has the best reward to risk ratio by far. When tech and the large caps are all doing good, that demands our attention. I hope it's an S&P 500. I think he is. Yeah, buddy. What don't you love? Just got into the summer today. There's your horrible Red River. Smash. Spring, winter, spring. Here's where it left the Red River. That's where you start buying it, not later than here. Standard risk. Missed that one, but man, it's got all that room to go. Get ready for Texas Instruments next week. Multi-time frame index. Who are your winners? The super greens. Stop me if you've heard this before. Microsoft, McDonald's, Apple. Mexico real estate, the Dow, the tech, S&P, and tech. Stop me if you've heard that before. The signs are there. Have been there all month. Trading value. Tesla, marijuana, Nvidia, clean energy, Devon. There's more of your. There's your three semis. Getting ready to go. All right, let's go to the traders frames now. There's my brother sneaking some in. You want to explain yourself there, sir?
Yep. So, I've just liked Ethereum for a long time here. Holding four on two positions. I just wanted to illustrate why another reason why I had gotten in where I did, because if you look, yeah, the PSAR did flip, but it was still kind of flat. But then look down in the Williams percent R, the next one down, that crosses the 50. So that's my good signal. It leaves the Red River in the MACD. Boom, just take it. Got to the 2-hour battle drill, bought another one.
This is failure to fail right there.
Yeah, yeah. But I was waiting for some confirmation it was actually going to go. So when
Notice
it,
notice the pinch of the Z3s
yep,
or
yep,
the Bollinger Band River,
yep.
and now
That's a Z3.
that's a range expansion right there.
Yep, and it's also my 2-hour battle drill. So all the signs were good. Then it kind of,
Closed well.
it got crushed before, the last couple
Closed well.
days.
This
So
was an opportunity to not fail, and now notice it's got long-term support here at the RL 270.
yep, yep. So
This was price here coming back to the RL 270, and
yep.
it kind of gets all super pinchy, and now starting the next leg up.
Yeah, I wonder what it would look like if I put the VWAP on there, but
Don't
not going
need
to
it.
do that now.
Don't need
Yeah.
it. Don't need
270 is a good enough indicator.
it.
So
Yep.
that has now become my McDonald's. I'm
Yep.
going to hold that till forever. Maybe.
Here's Alcoa, 2.5 in the usual way. That's like a long cross country train right there. Now this I think is going to be ready to go. As like I said on the metals are
Yep.
all enormously uh, favorable for the reward to risk. So that's good. And then
Yep.
Yeah, you got what was available in Tesla. I was surprised it wasn't stronger today, but
Yep.
I think that it's been bruised. This will be all right next week.
Yeah, I was in a meeting in the morning, so I missed the
Yeah, yeah, the easier entry down in here. Yep,
yep,
I'm with it.
yep,
All right, good job.
yep.
Uh, this is as nice as you want right
Wow.
here.
For you guys playing at home, that was a Mickey Redmond color commentator. Wow.
Yeah, no place for a nervous person.
Yeah.
Look at all this selling pressure, guys that just couldn't take it anymore, so they got out just in time to get smoked. Every one of these guys is kicking themselves and probably ran back over in here and says, I gotta buy it back.
Yep.
So they get out in here and then they buy it back here and now there's some. But they're happy now. That's going to be good to go.
Yep.
Timmy. This is what coaching, this is what self coaching looks like. Still balancing a very heavy work schedule. 1.4. You could get a 1, 2, 3 here, but that's still about as good as you get. That's about as good as you get, except that's a full 1 hour loss. I don't like that. I think it's no, that's about the right size. 40 cents. Yep, just got to take it. There's your reentry, and then if that's your risk box, that's another +2 that we left on the table right there. And after this move, a little bit of chop and go. They all look the same leaving the river. Don't wait. Microsoft 4.6, and I just ask you to take a screenshot and keep that in your mind. And that's not even, I guess it is. Oh, yeah, it is taking this as a stop and reverse. That's nice. Talk about a symmetrical mountain. Um, Constantine, the pound, Swiss franc 2.4. All right, we got this series here. I'm just gonna say, notice the power of the VWAP or the PSAR. So if your entry is here, first of all, your entry on the PSAR flip is somewhere in this region. You could enter anywhere in that region and still meet all of the criteria. So instead of entering here, we could have entered here, 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 or here, and then all of those can stay in all the way to here as protected by the PSAR. Trust the PSAR. It is your friend.
That looks to me like fear of missing out.
Yep,
Just gotta
you're holding
hold it.
yeah, he's holding the reins too tight.
Yep. Just
This
gotta
is
gotta go with it.
let's see. This is the diamonds. Same thing. The whole cluster here is, if that is enough to scare you out because of money fears, then you need to cut your position by 4/5. Trade at 1/5 of the size you're at so that you can learn to trust the PSAR. And what I want you to do from now on is, no matter where you're exiting and entering and exiting, do a separate notation over here that says, what if I just use the PSAR? And what would my returns be if I just did the PSAR? You'll be trading much less and more relaxed.
Go back and look at my trade in Tesla. Trust
That's
the PSAR.
reasonable in Brazil. I like the reentry. The Russell. I'm just going to ask, where are we? Leaving the river. The RL30 left the river here too. This is the beginning of trending behavior. So when you have the river like this, the first thing that leaves the river is price. The second thing that leaves the river very close is the RL10, which tracks price very carefully. So there's the RL10 leaving the river. Now, because you're using dark symbols, I'm going to use orange as the RL30. So the RL30, which is in here, it's slower to leave the river. But when the RL30 leaves the river, now when I have price and the RL10 and the RL30 outside of the river, that moment is the beginning of trending behavior by definition, right? And this is where the RL30 came out of the river. And I'd like you to start using standard colors so I can remember. But that's where price and RL10 got out of the river a little bit further back. But this is where trending behavior began inside this, and you get that kind of a move. And then here's where the R10 rolls over and crosses the RL30. That's your RL. I'm sorry, that's your RLCO, regression line crossover outside the river. That's a P1. So yeah, we should be entering somewhere in here, and then we get paid and probably have to exit here. And then our reentry is right here, because now what you have is the Kata 2. And this is an emerging dragon entry. That's a Kata 2 entry. This is what happens when you wait for confirmation of the peaks to get out. You end up getting in here instead of here. And then this becomes a loss instead of a gain. But this was, notice that the PSAR protected you the whole way up. And so we could be making this trade here. PSAR, anyone? PSAR flip. Draw your wrist box to here. Trust the PSAR. You get out here. You make that much on that much risk. So none of these are patterns that we teach. Same thing. This is a thing of beauty right here. Notice that less is more. Didn't fail further. Held support at the PSAR. Held support at the PSAR. And actually took this out, so he buys it. Kata 2. Crush. 7.5. Using the PSAR exit for 7.5. Ladies and gentlemen of the jury.
In 2 hours.
I rest my case.
2 hours.
2 hour.
2 hour.
SSC. Winter starts here. Spring starts here. Comes out of the Red River right here. See yesterday's? There's your buy. And then it goes into summer and then into fall. Pause. Dudes, that's how you do it.
Outstanding.
30-minute chart. Same thing. Same thing. This is the here's the short. You don't get it until here because of the gap down, but then you get this, and then here's your entry. There's your exit. Mark up those patterns so that you get used to seeing those. This could be a second entry right here. On this one, when you get that, you have to get out not later than here at the edge of the river so that you can bank this. That's a reasonable effort cut, and then you could re-enter there and go. But here's also a short collapsing dragon. Oh, winter enters the river, the Red River, leaves the Red River. That's your optimum entry. The harsher the winter, the hungrier the people are for a good spring and summer growing season.
Another reason not to get out there is those lines are still outside the river in the MACD there. So that's why that's reinforcement for
Yeah,
trusting the
you
PSAR.
could hold that. Yeah, notice how you trust it, and
Trusting
now
the
notice
PSAR.
this. That could even be a re-entry because you're above the
Exactly.
peak of the RL10. So
And those
even if
lines are
that does
above it.
get you out,
Yeah. Yeah. But I mean, if you needed a second reason to stand fast like they do in Master and Commander, it's because the lines are outside that river and they're going up. They're being supported by that river in the MACD. Same thing.
and then when this rolls over, you just take that exit at the edge of the dragon, and you make this bank. This is summer, fall, summer. You can buy that. You got it here, so that's still pretty. Oh no, wait, that's the exit. Um, I don't mind that short. That's just got to be a stop and reverse though.
I like the exit because it's where the lines go back in the river in the MACD.
Summer. Plus a Kata 2. Emerging Dragon. So take your pick. Here or here. And exit or here at the edge of the. I like the edge of the dragon. When you get that kind of a move, dude, accelerate your stop to the edge of the dragon, and then when this thing peters out and cruises over, it's supposed to keep going. Like it was trying here, and it didn't. It started doing this crap, so get out right there. I like the re-entry. Good scratch. Macadonna or dear. PSR flip. Second position gets a good break, re-enters, get paid, re-enters, gets paid. Nice for tactical. I just think you got to remember, oh yeah, this thing is all-time high. Now, this is a summer coming into the station. We get any kind of buying pressure, that's going to be summer, fall, summer, and that thing is off to the races. Ladies and gentlemen of the jury, that's a good second. That's a good first entry. It's a better second entry off of this one, and that's a good exit to go into the weekend and just say, you know what, I'll take it. I think that's looking good, Paul. I think you're sorting it out. All right, I think that's everything we got. We'll get this published and posted, ready. True Story Circle in the morning. And let's see what we got. Swing trades tomorrow night. Tomorrow night is going to be late. Post your swing trades. We got a soccer match tomorrow, so I will be doing the recording after like 9 o'clock. So it will not be a live podcast unless, Bill, you want to talk tomorrow night. I will get that.
Hey, Ken, there's a question from Greg there.
Oh,
I yes. Greg, when you get more comfortable with stuff, what I would say there is turn down, which I think is some of the folks here, they have their price so prominent, they get hypnotized by price. The regression line is really where you want to be in decision making, I think. That's my opinion.
Yeah,
so I would always say
there's a couple things on the exit also I'll add. I agree with you, Bill. Here's what I end up seeing a lot, right? So you get some risk box here. Let me draw that darn thing. Come on. So you draw your risk box and you get your entry, and that thing starts coming up and starts rolling down. So if that's the peak, there's a number of exits that you can have on this. One of them is sort of the manager's exit is the PSAR. In some cases we have even a Bollinger Band mean, the middle of the river, and either one of those can act as a mechanical entry. Like we sometimes will put 1/2 on the slow Bollinger Band mean and 1/2 on the PSAR, and then what you end up getting is like an average loss. Now, sometimes when that happens, you'll get hit here, and so you're out, and then it recovers and goes back up, and this one never gets out. And you say, oh, I should always use that Bollinger Band mean. But then sometimes this thing will be here, and it comes back, and you don't get out, and then you come all the way down here and get knocked out, and you say, oh, man, I should always take this one. Well, which one should I take, the aggressive or the conservative? Here's how you solve that. Just put 1/2 on each, and then if this does get you out, that gets you back in. And this thing is guiding you. And so you always get the average of those two, but it resolves all of the psychological distress. Now, on a nice move like this one, and started to roll over, you always know what, on a nice win like that, you always know what your maximum favorable excursion is. And that's some dollar figure, and that's some R multiple. And now that thing is going like, how much of that do I want to give back? Am I going to give back more than one risk box anyway.
Yeah.
I put a risk on when I didn't have any money, and I was willing to tolerate that, and I'm trying to take less than that. And now, just because this thing is up, I'm going to start giving back abnormal. If my average win was here, and my average maximum favorable excursion was here, now all of a sudden, when I'm at an extremely abnormal good, I'm not giving back even that much. I'll give back half a box. And that's more important than respecting the mechanical exit. So you got to know if this is an above average win or a really abnormal win in order to guide your exit. When you have abnormal gains, I'm using how many actual dollars am I giving back, and I never give back more than that. Never.
Hey, Greg, the other thing that I do, when I start getting an abnormal, I put a maximum 1 hour trailing stop. That's just in case it, like McDonald's did, shot way out. That way I just capture it. Because why? Because I know how to get in. We all know how to get into trade, so just get back in. The other thing is, if you notice on my charts, something that I use a lot, and I've beat this drum before, is the MLR10, and I put an SMA3 on the MLR10. That's my hair trigger. It's that thing is gold, and that's really good for long-term trades, by the way. That's and then my secondary, so the PSAR stop, that's my stop of last defense.
Yeah, me too. Now, here's the other thing. The signal is not official until the RL10 crosses the PSAR. Now, when that happens, and then if you trigger the exit, you're actually getting an exit in this bar. So you're exiting somewhere down here.
Yeah.
Whereas if you just say, you know what, on the way up, I'll wait for the RL10 to cross through, but on the way down to preserve, I'll get out when price crosses it and take my lumps.
Yeah.
I hope I get out too soon all the time because I know how to re-enter. You can't even re-enter until you first exit. So I want to be
Yep.
really good on my re-entries.
That's why I use the hair trigger that I described, because I'm already thinking of, I'm a big retracement guy. After the morning 2 hours is over, I go immediately and look at the biggest losers of the day, and I look for retracement trades.
Yeah, that's your
That's my
harsh
bread and
winter.
butter.
It's your harsh winter, and the logic of that is, the harsher the winter, the more likely that was driven by the emotion of fear, and therefore the recovery is always going to attract the buying
Coyotes.
pressure. But then you just say, but I don't believe in that trade.
Right.
And so how quickly can I get my risk out and lock in that no lose plus dinner for two? Then it's just a science project. Then I say, well, let me monkey around with different styles of exiting. That is much more important than fiddling around with that. We've already handed you the secret sauce on the entries, just like that. All right, that's everything we got.
Thanks, guys.
Shout it.